Welcome to Invariant's Let's Get Smart series. We will present several of these sessions over the next few months. Our purpose is to offer you an overview of important issues we request that you address, if not already attend to. We are presenting the foundation, and together we can build on it. Details on the topics presented are not included, so please email us or call for whatever additional information you need or with questions. We hope you enjoy this series and find it worthwhile not only for yourself, but for loved ones and others you know. We've included a chart to help you determine what is important to you and to those you know and love. Go ahead and make a reasonable copy of this chart and just check off what you wish to remember as critical for present and future considerations. At the conclusion of this session, we will review a point or two that I consider most important. And after the review, I will look at the chart and add comments that I believe will help you understand the entire session. So let's get started. The first topic is money coaching, one of the best investments you can make for yourself or for someone in need of creating a better relationship with money. There are many types of coaching, such as business coaching, career coaching, and life coaching. Money coaching deals directly with money and the individual in need of help. So what exactly is money coaching? Money coaching is so much more than the term implies, talking about money. For example, your concern can be addressed and a quick fix can be found. The problem with this process is that you will probably find yourself in the same negative money situation in no time. What money coaching produces is a long-term solution for you. The process involves getting to the core of the money-related problems. Why are you in trouble in the first place? Why have you accumulated so much debt? Why is it difficult to save or invest? Why do you feel that you just can't get ahead financially? As the coaching process delves into these issues, we discover the origin of your money-related patterns and behaviors. Then, the specific concerns are addressed and solved. The results of money coaching are quite impressive, and you'll find how much happier you become. As it is never too early to be coached, a recent college grad is a prime candidate for money coaching. He or she is just starting a career and beginning to make financial decisions never made before. Getting it right is, of course, critical at this stage in life. So a parent or a grandparent could give a gift of money coaching to a recent grad, and Joe DeMiro, our certified money coach, will be sure to support your children or grandchildren for as long as necessary. So consider money coaching for those you believe are in need of assistance, and email us with questions or to get more detail. Our second topic today is reverse mortgages. Yes, it is important for many of us to get smart about reverse mortgages. After all, it is a reasonable way to increase your income. Lots of seniors could use a pension to supplement their income, and that is exactly what reverse mortgages are designed to do. So how does it do that? Well, instead of making a monthly mortgage payment to a lender pays you a monthly payment. As long as you are age 62, you're eligible to take a reverse mortgage. How much money are we talking about? Well, it depends on the value of your house, present interest rates, general fees, your age, and a few other considerations. But the bottom line is you can receive monthly payments for as long as you live. The cash payout depends on the equity in your home. It is best to have a low mortgage balance, or even better, no balance at all. So what is the downside? Well, you must live in your home, pay property taxes and homeowners insurance, and take care of the usual maintenance considerations. When a home is sold or no longer used as a primary residence, the cash, interest, and other finance charges must be repaid. All proceeds beyond the amount owed belong to your spouse or your estate. Any remaining equity then can be transferred to heirs. But I suggest before you get involved in a reverse mortgage, know that the home may be given to the lender. After all, the home is actually how you pay off the loan once you move or die. Important to know is that the loan is a non-recourse loan, meaning that you will never owe more than the house is worth. And actually, funds paid to you may be in monthly payments for as long as you live in the house, monthly payments set for a period of time, a line of credit, or a combination of the above. Also, Social Security and Medicare benefits are not affected by the increased income. If you receive SSI, there are adverse implications you need to know. You can spend this newfound income on whatever you wish. If this reverse mortgage scenario has piqued your interest, please contact us for more details. You and your parents may benefit from this type of loan. And now to annuities. These are products that make sense for some, but not for all. An annuity is a financial product sold through an insurance company. Typically, your money is held in an account for you, and at some later date, you can receive an income stream. Money can be paid to you in a number of ways, for life or for a period of time, for example. And the income stream could actually begin immediately, if this is your desire. There are two basic types of annuities, deferred and immediate. A deferred annuity holds your money for a period of time until you are ready to begin taking withdrawals, say in retirement. With an immediate annuity, you begin taking payments soon after you place the money into the annuity. Deferred annuities accumulate money while the immediate annuity does not. Further distinctions exist, such as the fixed type and the variable type. A variable annuity uses investment products within the annuity to secure gains. The fixed product does not. So you can see the variable annuity carries investment risk. If your annuity gains value, your money in the annuity grows tax deferred. Only when you take the money out will that portion be taxed. So on your annual tax return, and as long as you do not withdraw the funds, no income is stated. Advantages to annuities include they defer tax gains, there is no additional contribution limits, as there are, for example, in an IRA. You can receive the guaranteed payments for a specific period of time or for life, giving you steady income, and you can build yourself a pension or a second pension. Disadvantages include some who sell annuities disguise them as the best investment vehicle or savings vehicle around. They are not. There are often hidden fees that cut in the profits the annuity pays out, so buyer beware. Also, commissions can be steep, and often the surrender period is tied to commission paid to the seller. The surrender charge is assessed if you choose to withdraw a lump sum early before the insurance company wants you to. And as with your IRA, early withdrawal penalties apply for withdrawals before age 59.5. So if annuities sound right for you or someone you know, please contact us and we will give you the details you need. Okay, lastly, we will discuss the good news and the bad news. The good news is we are living longer than ever before. The bad news is that we are living longer than ever before. That's right, living longer carries bad news. We used to live shorter lives and had fewer health issues before death. Now, with this newfound longevity, most deaths occur after a long period of chronic illness. So it may be best to plan for a period of some degree of disability. Refusing to do so can cause a great deal of inconvenience for others and possibly financial disaster. Planning is prudent and an act of love. Better to have a plan and not need it than not have a plan at all. When you reach the point of needing help due to some disability, it may be too late to plan. The simplest way to plan for management of your business affairs is to execute a durable power of attorney. You appoint an agent to act for you if you are unable to manage for yourself. This power is valid until death. Your agent must be a trusted individual. Please secure the services of a qualified attorney to prepare the durable power of attorney. It really is not a simple document, and we suggest that you do not use the internet to complete the power. Some seniors ask about living trusts. For many, a living trust is not necessary. However, a well-drafted living will can be highly effective when appropriate. There are many issues that make living trusts worthwhile, and a qualified attorney can help you decide if it is right for you. What about joint accounts? Well, with a spouse, this usually makes sense. Assets can be transferred automatically upon death, and the non-affected spouse can manage the couple's money while the other spouse is medically unable to do so. A joint account with others can cause lots of problems, even when kids are involved. Check with us or with an attorney on this subject. Also, in later life planning, be sure that you have the support people who know your business. This means not to be so secretive about your affairs. Be sure your spouse has critical information he or she should have, such as account numbers, investment company names with their phone numbers, the banks with which you deal with, insurance policies, property and casualty information, and so on. Other than having a professional handle what they need to, you have lots to do, to discuss, and to write down. Now let's take a second to review the aforementioned chart. Money coaching. Those who need help handling money. Think of your kids, recent college graduates, friends who you believe have money issues. More do than we think. So don't be shy in spreading the news about money coaching and how they can help. These people usually talk about not being prepared for retirement, not dealing well with college costs, and such. Reverse mortgages. Think of your senior friends who may need additional income. If not yourself, who can definitely benefit from a little bit more income. You probably know at least 2 people or couples. When you have the time, let them know that they can talk to someone about how to improve their monthly budget. Annuities. Another way to diversify and obtain guarantees on your money. Someone with CDs at the bank may be a great candidate for an annuity, given the low interest rates banks are offering. Certain annuities are designed specifically to compete with CDs. And for later life needs, be sure to create a durable power of attorney and possibly a living will. An estate attorney can help you decide if a living trust is appropriate for you. And let's be sure to have a spouse or a trusted person know your business. Account numbers, bank names, investment companies, insurance policies, telephone numbers, online bill pays, and a lot more. This will pay off greatly before you know it. That completes our first session of our Get Smart series. We hope you have learned some valuable information for yourself and for others you can help. We look forward to your emails and phone calls so that we can explain and address these subjects in further detail. Have a good day. So we can explain and address these subjects in further detail. Have a good day.